and welcome to today's Marine Report analysis videos on Wednesday 30th of August with me, Richard Perry, market analyst at Hantec Markets. We've got an interesting turnaround in these markets. We had a significant flow into safe haven plays yesterday, but that sort of turned around as the session went on yesterday. Sorry, that's the wrong chart. Here's the board, and what we can see is the dollar regaining ground. Euro got to 20.70 yesterday, has turned around since then, so it's 120 ticks back from that. That's an interesting turnaround. Look at the yen as well. The yen got to I think a low of 108.40 area, and again that has rallied quite sharply on dollar yen. So the dollar has recovered. Look at this rebound that we saw, and that from yesterday's intraday low, and that sort of has come as Treasury yields have bounced on the 10-year and the 2-year. But these rebounds that we've seen, are they just sort of delaying the next sort of leg lower? Are we going to see these rebounds being sold into? It's possible, because you've still got the geopolitical factors at play, and there's no real resolution at all yet. It's just that the markets have sort of taken a little bit more of a calm view of the situation, but the situation in Korea, or North Korea, is still fairly tenuous, and it's not really a situation that has improved at all. And the fact that you've got Trump and Kim Jong-un, who are both pretty unstable leaders, aren't they? Let's be sensible. Are in charge. Doesn't really give me a great deal of hope that we're going to get a particularly pleasant resolution to this situation. So we still have this safe haven underlying bias, I think you'd say. And looking at the gold chart, I think you can see that. And I'll show you through dollar yen analysis as well. You've still got slightly elevated volatility, not massively. You had a big intraday turnaround yesterday where the VIX spiked higher and then lower. But we're still sort of above that 11.5 level, and to be fair though, in the historical context, that is still very low, isn't it? Anyway, yeah, you've got a rebound that has been also seen on the equity markets today. All these equities were around about sort of just under 1% lower yesterday. They've rebounded to a degree today, but is this rebound again just sort of not necessarily a dead cat bounce, but is it sort of just unwinding the move to renewed downside potential? That is the issue that we need to face there. So in terms of data releases today, you've got German inflation that's released throughout the morning, and that is culminating in the release at 1 o'clock with the countrywide inflation data, which is expected to tick higher to 1.8%. So that sets us up a little bit for an improvement potentially, I suppose, in the Eurozone data tomorrow, which will be more in focus. You've got the ADP employment at 115, 183, slightly downgraded from yesterday from 186 actually. ADP hasn't been a very good trigger for non-farms in recent months, so just be careful of that. GDP second estimate, 2.7. That's interesting, because that was 2.8 yesterday. So 2.7 was the first estimate, or the advanced reading. So yeah, that is interesting. So no expectation of any real change there. But yeah, very. That could drive a bit of a dollar recovery, or further dollar recovery, if that is an upside surprise there. Now, my chart today is the dollar CAD. Now, dollar CAD has been an interesting one, because I'll zoom out and I can show you the context of this these two lows that we've just had recently. They come in basically around about that 24.60 level, which had been such a key level through 2016. Now, obviously that was broken briefly in the July lows, but 24.12 held on several occasions, and the market started to build support. And it seems as though that with these sort of positive candles, you are potentially building another recovery. Now, you look at the stochastics; they've crossed higher and they're on the brink of a near-term buy signal. You've got the RSI, which is ticking higher again. You've got the MACD lines, which are, well, plateauing really, but not certainly didn't really didn't really sort of gather too much momentum with that downswing. So is there a potential for a recovery now? You've sort of started to challenge these sort of sequence of lower highs, and I've got this line in here because it shows better on this daily, on this hourly chart, whereby you have a pivot line around this 2550 area, 2550, which had been supportive, became resistance, and you've got arguably then a double bottom pattern that you could measure around about 100 ticks of measure, if you sort of take it from where the pattern was sort of formed. I don't know why that's not moving well. Okay, there we go. You could sort of measure that as about 100 ticks up from 2540 area, so that gives you 2640, and that would be a recovery that would take you through 26 figure, which is again another bit of a near-term pivot. So you're starting to challenge these resistance levels that had built up through this sort of selling pressure of late August. So it could be a bit of a recovery. Now, you would certainly look at this trend lower over the past few months and say, well, it's just ultimately a recovery into resistance that's likely to be sort of found as another selling opportunity. But there is certainly a near-term rebound that potentially could be building now, with another third positive candle in a row possibly about to be posted. And that sort of has sort of similarities with this run higher that we had early August, so we could certainly see a bit of a recovery near term on this dollar CAD, and a move above 25.50 would trigger that initial recovery. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.